Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, May 18th, 2011. This morning I'm talking about global stagflation, and I just started to touch on this yesterday because we were taking a look at what was going on in England with the Bank of England, and what was going to happen as far as CPI data that came out yesterday and the Bank of England rate policy meeting minutes, which were released this morning. I just want to take a look here at the pound. Okay, we can show you that the pound is indeed lower. I pointed out these reversal candles yesterday. Okay, you can see pound is selling off. A couple things happening here. First, all right, Bank of England minutes came out. There was no change to policy. All right, they're concerned that declining growth is going to be dampened by potential interest rate hikes. So they're willing to let inflation ride for a little while to try and see if the economy can rebound on its own. Now they've made this sort of massive shift here. They've cut back on government spending. All right, now they're hoping that the private sector is going to step in and take over. So that shift is taking place right now. So we're starting to see what we hope is not stagflation there, all right, where CPI data is high, all right, GDP growth is declining. All right, second thing we saw there is the initial jobless claims in the UK. All right, they had 12,500 people were out of work, and they were expecting no change in that. So perhaps unemployment is rising a little bit, all right, and that could be a result of the government austerity and things not picking up as quick as they'd like. But one of the themes that we're looking at both here in the U.S., we're seeing it in the UK. The UK is really the first sort of domino to fall here. It seems like all these central bankers have sort of painted themselves into this stagflationary corner, all right, where they're too concerned that growth's going to be hampered, so they can't raise rates, all right. Meanwhile, they've got prices going up, so people can't afford as much stuff. So it's sort of like a double-edged sword. There's a no-win situation there. I guess part of the problem is that they're so concerned that everybody needs to borrow to be able to buy stuff. I mean, why can't people just pay for things? Why can't it be a good thing that prices do come down a little bit so that people can now afford to buy more, all right, as opposed to having to borrow to buy more, all right? And there's that whole debate about interest rates higher versus less. We can harp on it a little bit. I'll probably talk about it in a little bit, but let's just get to some of the other regions. Showing the Aussies lower. Consumer confidence figures came in last night, and they were at the worst levels since 2010. All right, they declined 1.3%. Last month was an increase of 1.2%. So consumer confidence fading in the Australia. Okay, could be a result of Chinese slowdown. Could be a result of the sharp recent pullback in commodities prices. But whatever the case may be, we also saw the higher. Stronger Aussie, so they may be concerned about that for their exports. Just take a quick look at the Kiwi here. Kiwi's actually higher. All right, PPI index came in higher than expected. All right, inputs were up 2.2% and outputs were up 1.7%. So that could be showing signs that inflation's happening here, and the temporary rate hike that they made as a result of the earthquakes that took place in the second largest city. All right, they may be getting ready to return to normalized policy. So we're going to take a look at that. Take a quick peek at the euro. Euro's largely flat. Not a whole heck of a lot going on there. We've got the Strauss-Kahn guy who's now on suicide watch in Rikers. Perhaps he should resign from the IMF before all this takes place. So Euro's looking to hold on to the leadership of the IMF. We're going to see what happens if this becomes a big political melee, and how that affects perhaps the credit crisis going on in the eurozone. So we're going to keep an eye on that one as well. All right, not a lot of big news coming out of the UK, although we'll get some ECB ministers speaking on the economy today. But more importantly, speaking on the economy is going to be Ben Bernanke. All right, we've got the FOMC meeting this afternoon. All right, so he's going to be, it's not the meeting, but it's the meeting minutes which are going to come out. So I apologize. That's not actually Bernanke speaking. It's just a release of the minutes. And I was like, wait a second, that's not right. So we're going to see exactly what they're talking about there, but don't expect it to be anything different from what we already know, that they're concerned about higher interest rates derailing growth, and it's kind of one of these things where sooner or later they're going to have to make a decision and say, listen, we can't let rates be this low because it's driving inflation higher. higher prices scares people away from buying discretionary stuff, and it forces them to buy things that they need, all right? Food, energy. But of course, here in the U.S., the Fed strips that out of the inflation figure, all right? That's the headline number. We look at core here in the U.S., and they say, well, all right, let's not worry about food and inflation. Who cares about that stuff? What about the prices of TVs and other stuff that people don't give a crap about? You know, are they buying that stuff? And if that's not going up, then hey, we got no problem. There's no inflation. Well, we know differently. And part of the problem is, you know, you just assume that, okay, by raising rates, prices will come down, all right? And you assume that that's a bad thing, all right? I think that is actually going to encourage people to go out and buy more. But the problem is the housing market, all right? That's going to cause housing prices to fall. Well, what's that going to do? Well, the banks have a lot of stuff sitting on their balance sheets right now, all right? That could potentially bring out a whole nother wave of defaults. So what needs to happen? Well, that problem needs to be fixed somehow, all right? And that's going to take political will, all right? That's something Congress needs to do. Ben Bernanke can't fix the housing problem. All he can do is keep it afloat, all right? Somebody actually has to build like a life raft for the whole market and figure it out. And whatever they figure out to do, it's going to have to include ways to account for declining home prices, because that's going to happen. Okay, you know, mark my words. Unless we just go with this extend and pretend to the point where, you know, who knows what's going to happen at that point. Lastly, I just want to show you dollar yen. We're looking at it right here. You can see just came down to about 81, doing a little bounce off of that. Yen's actually stronger because we have a little bit of risk taking in the markets, but it's interesting. You know, Asian stock markets were up overnight. Pac Rim index was higher. Okay, we've got oil marginally higher today. We have gold higher. So commodities are up. We're seeing U.S. stocks higher. Okay, but we've got what looks like a little bit of risk taking in the currency markets here. Notable exception here is the Kiwi. Okay, which is showing some strength, but again, we've got yen strength happening. So we're going into tonight. We're going to get Japan's GDP figures, all right, and they're expecting declines of 1.9% and 0.5% for the quarter-over-quarter numbers. So we'll be interested to see how that changes in light of you know, the earthquake and the tsunami that they had. Okay, and then tomorrow night we're going to get the Bank of Japan rate policy decision. Now there's some talk that there could be you know, further easing coming on and coming forth from Japan. So going to have to see what happens there. So you know, that's sort of what we're looking at today. I'm going to say that right now stagflation is going to be probably the biggest detriment to global economies, and I think it's probably going to start happening around the globe. I mean, it's the kind of thing where growth is going to stagnate because nobody can buy anything, because nobody wants to buy anything, because prices are going up, and that's all due to Fed policy. All right, you can talk about, well, UK monetary policy, they need to raise rates to lower prices there, but you know what? We've really exported our inflation to the UK as well as to other places around the globe. And I think it's the kind of thing where, you know, people, banks aren't lending money out because they don't have to. Okay, normally a bank makes money, they borrow from the Fed, they lend it out to the customer, all right? But they have to pay the Fed, you know, usually some points on interest, all right? And then they mark it up, they bring it out to a customer, they make the spread. That's how a bank traditionally made its money, all right? You borrow from the Fed, you loan it to a customer, you mark it up, you make the difference in interest, boom, that's how you make money. Well, if you don't have to pay the Fed for the money, where's the incentive to loan it out? You don't have one. You can sit there, you can gamble it on oil, you can gamble it on gold, you can gamble it in stocks, you can buy credit default swaps, which still haven't been regulated. All right, so there's a lot going on in the markets today, and I think that this irresponsible Fed policy is really what's holding us back and not bringing us forward. So it's time to you know, start to face the music and you know, get ready to make the tough choices that you know, have to be made in order to move these global economies forward. So that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.